Losses are an inevitable part of investing. Whether you're investing in stocks, crypto, or any other asset, there will be moments where the market takes a dip, or your investments don't perform as expected. While the idea of experiencing a loss can be uncomfortable and unsettling, it's a reality that every investor faces at some point. However, the true test of an investor lies not in whether they experience losses, but how they handle those losses when they occur. This video will explore how to handle losses effectively, stay focused on your long-term strategy, and use setbacks as valuable learning experiences to become a more successful investor. Understanding the emotional impact of losses. It's natural to feel a sense of disappointment or frustration when things don't go as planned. Losing money can trigger feelings of fear, anxiety, and doubt. It's easy to let emotions take the wheel, leading to rash decisions that can compound your losses. This is especially true when the losses come unexpectedly or when you're heavily invested in a particular asset. But if you let these emotions govern your actions, you'll only exacerbate the situation. Successful investors know that emotions, such as fear and greed, are the biggest enemies when it comes to making rational investment decisions. When faced with a loss, it's essential to pause, breathe, and regain control over your emotions. Instead of reacting impulsively or allowing negativity to cloud your judgment, take a step back and remind yourself that losses are part of the game. The importance of detaching emotion from decision-making. One of the most important lessons in investing is learning how to detach emotion from decision-making. Emotional investing leads to poor decisions, such as panic selling during a market downturn or holding on to an underperforming asset out of fear of further losses. These types of actions may provide short-term relief, but they're unlikely to lead to long-term success. When you experience a loss, it's crucial to remember that it's just one part of the journey. Successful investing requires patience and a calm mindset. If you can detach your emotions from the situation and evaluate it objectively, you'll be better positioned to make decisions that align with your long-term strategy. Turning losses into learning opportunities. While losses are often seen as setbacks, the best investors view them as learning opportunities. Every loss offers valuable insights that can help you refine your approach, identify weaknesses in your strategy, and improve your decision-making process moving forward. Instead of wallowing in disappointment, take the time to analyze why the loss occurred and what you can learn from it. Ask yourself questions like, did I follow my investment plan, or was I swayed by short-term market movements or emotions? Was this loss due to a lack of research, or did I overlook important factors before making my investment decision? How can I adjust my strategy to avoid similar losses in the future? By asking these questions and analyzing the situation, you'll be able to extract valuable lessons that will help you make more informed decisions going forward. Staying true to your strategy. When facing a loss, it can be tempting to abandon your investment strategy in search of a quick fix. Many investors, especially beginners, may panic when they see their portfolio losing value, and this panic can lead to impulsive decisions. But abandoning your strategy when things go south is one of the worst mistakes you can make. Successful investors understand the importance of sticking to their long-term strategy, even when the market is volatile. They know that the key to building wealth is consistency and discipline over time. A temporary setback shouldn't prompt you to make drastic changes to your strategy or abandon it altogether. Instead, use the loss as a reminder to stay focused on the bigger picture. Before making any decisions in response to a loss, revisit your original investment plan. Ask yourself if the reasons for your investment still hold true. If your long-term goals and strategy are still valid, continue following your plan and avoid the temptation to make emotional decisions. Managing risk and diversifying your portfolio. Another essential aspect of handling losses effectively is managing risk. The best investors understand that it's impossible to avoid losses entirely, but by managing risk, you can minimize the impact of any single loss. One of the best ways to manage risk is by diversifying your portfolio. When you diversify, you're spreading your investments across different assets, industries, and markets. This way, if one asset or sector experiences a loss, the impact on your overall portfolio is minimized. Diversification helps balance risk and ensures that you're not overly exposed to any one investment. By having a well-balanced portfolio, you can protect yourself from large losses and better weather market fluctuations. The power of patience in the face of loss. Patience is one of the most powerful qualities you can cultivate as an investor. It's easy to be tempted by short-term market trends or to react impulsively when you experience a loss. However, patience allows you to ride out the ups and downs of the market and stay focused on your long-term goals. When you're patient, you give your investments the time they need to recover and grow. While it might be painful in the short term, long-term investors who have patience tend to see positive returns over time. This mindset shift, from focusing on short-term losses to focusing on long-term gains, can make a world of difference in your investment journey. Maintaining a growth mindset. A growth mindset is critical when dealing with losses. Rather than focusing on the negative aspects of a setback, approach it as an opportunity to grow and improve. Every loss teaches you something new about the markets, your investment strategy, and yourself as an investor. With each lesson, you become better equipped to handle future challenges. By adopting a growth mindset, you'll be able to view losses as stepping stones toward success. Instead of allowing setbacks to discourage you, you'll see them as essential parts of the learning process. Remember, no one wins all the time. It's how you handle the losses that will determine your success in the long run. If you found this strategy helpful and want more insights on how to navigate the ups and downs of investing, make sure to like, subscribe, and hit the notification bell so you never miss out on valuable tips and strategies that will help you become a stronger, more disciplined investor.